Now we're going to talk about the punch. The punch is a real simple index. Most of my stuff is. When the little black line turns green, it gets above the green line, we have a punch formation, and we're going to be looking for a buy signal if the market has been coming down. Been coming down, we turn green, we should see a buy setup. We're coming down, it turns green, a buy setup. Coming down, it turns green, a buy setup. It's called the punch. I've been teaching this for you commodity traders for a long time. How many of you use the punch in your trading? Yeah, it's a great setup tool. Well, we can use this for stocks as well. When I go to these foreign countries, they want to trick me a little bit. So, will you find a stock to buy here? I go, well, I don't have any of your indicators, but I always have my little secret. I pull this out. And I say, okay, show me your stock. And they show me Dr. Reddy in India or whatever. And I put on the punch, go, whoa, look at the lows you called it. That it works every country I've been in. I'll be in Russia in November. It'll work in Russia. Worked that last time I was in Russia. It's a great setup tool. So what this index is ADX, Wells Wilder and Gresham Northcott's invention. When it gets above 40 and prices have been coming down, it sets up a buy. That's all there is to it. So here we're looking at Amazon. Market has been coming down. We get above 40, set up for a buy. Oop, set up for another buy. Set up for a buy. Set up for a rally. It sets up wonderful short-term trading opportunities. This is on a daily basis. I like to look at it on a weekly basis. We'll go to our next chart. Here we're looking at Costco on a weekly basis. Oh, Costco is coming down. We get above 40. I'm looking for buys in Costco. It's above 40, but we're rallying, can't do anything. Above 40, can't do anything. Coming down, we're above 40. I'm looking for a buy signal. Looking for a buy signal in Costco. So it's one more tool that says we're ready to have a nice rally in this market just about now. It's not an absolute buy signal. If I had to use it as a buy signal, this is what I would do. When it declines 1 week, I'm going to look for a buy signal in the market. When it declines 1 week, the next week, that's my buy point. Or over here, it declined, there was a buy point. But there are a lot better tools for entry than this, but it's a phenomenal setup tool, as you see in a little bit. Questions on the punch? Okay, it's in all your chart books. You have it on all your...
What exactly are you measuring?
It's measuring... I call it punch, because I just needed a name. But ADX itself is measuring the net change of new highs in a marketplace. And it just, my observation years ago, it gets above 40 and we're declining, we're close to buy point. Alexander? These are, yeah, I like all my setups are weekly. You can use it on daily. I've shown some dailies, but I like it for a setup on a weekly chart. Okay, now we can use this in another fashion as well. Not very often, but occasionally ADX will get above 40 and then go all the way above 60. When it gets above 60, that's the end of the trend. Very few markets will continue going up or down when we get above 60. So above 60 is the end of an uptrend, end of an uptrend, end of an uptrend. If it's above 60, we'll go to our next chart. Maybe we see a buy signal on the market. We're above 60 in Walmart. We're close to a buy point in Walmart. We're above 60 over here, end of uptrend, end of uptrend. Markets just can't get much higher than 60 with ADX reading before they stop whatever the trend has been. It could be up, it could be down. So it works both ways here. Here is an uptrend, end of an uptrend, end of an uptrend. This is Apple. We get above 60, we get an end of a downtrend on the downside of the marketplace. It doesn't happen very often. Gosh, and Apple has been, 2 times, that's it. It's not going to call every move for it, but I'm really alert to 60s on my charts. So we use the ADX for a punch. We're above 40 and the market's coming down, or any time ADX above 60. If we're rallying, it's a sell. If we're declining, it's a sell. It's about as overbought, oversold as we can possibly get in the marketplace. Okay, now we're going to look at valuation. This is probably the most unique tool that I've done. I want to be able to value a commodity or a stock. How do I do it? Well, we've looked earlier today at using valuation measures based on fundamentals. There's another fundamental measure that we can use technically, and the index is pretty simple. I'll explain it in a moment. I'm going to look at this stock versus the bond market, because I happen to think that interest rates are highly influential of stock prices. Make sense to you? Oh yeah. If we have real high interest rates, stocks come down. When interest rates are low, like we've seen, very positive for stocks. So there's symbiotic relationship between interest rates and stock prices. So I developed a spread between a stock and bond market. And when that spread gets real high, the stock is overvalued relative to bonds. When it's real low, at a low reading, we're undervalued relative to bonds. What an interesting idea. We can actually look at valuation on a daily chart. And it does a pretty good job of telling us this stock is undervalued here, we're undervalued here, undervalued here, undervalued here, undervalued here. We're at an overvaluation here or here. Pretty darn good job of alerting. It's like, I better be a little bit careful here. So the valuation is a great tool that gives an insight into the stock market. Nobody else has this. What a great insight into stocks. We'll go look at another one now. Let's look at Microsoft. Microsoft is undervalued relative to the bond market, undervalued. And this is what's so interesting about it. If you look for overbought, oversold indicators, is Microsoft oversold there? No, it's almost at a new high, isn't it? But it's undervalued. So we want to be a buyer. Usually you wouldn't touch Microsoft with a 10-foot mouse up at this area because you think it's overbought, but it's undervalued. What a way different concept to have set up trades in the marketplace. We're undervalued way down here. Oh, we're oversold, but we're undervalued. We're undervalued in here, and we get overvalued at these points. Alcoa, oh my gosh, this is how we're going to use it the best. Again, you see the undervalue zones. This is the killer way of using this indicator. It's just dynamite. It does set up some trades all on its own. If we're in a big uptrend and prices go undervalued, that's a setup buy on its very own. So if we're in a big uptrend like this and we go undervalued, holy cow, how can that happen? Who would think that the market is a buy up here, but it's undervalued, or here it's undervalued? Even at a high price level, it's undervalued. How revolutionary is that? There's no other indicator that will show that to you. But since we're looking at this market versus the bond market, we pick up these things nobody else will ever see. We're undervalued, we want to be a buyer. So in big uptrends, I want to buy undervalued readings. And in downtrends, and we go overvalued, oh, I want to sell it, don't I? So the optimal trade with valuation, uptrend, I want to be a buyer if I go undervalued in an uptrend. Downtrend, we're in a big downtrend, we go overvalued, oh man, I want to sell that market. We're overvalued and price is down. You're not really overbought up here at all, but we're overvalued. Yeah, let's do another chart. I think we have another one. Yeah, okay, good. So here's Fastenal. Big uptrend. Look at the market. Straight, oh, we're undervalued. My gosh, how could that happen? It will never be oversold here, but it's undervalued. So it's a really great setup tool to find these unique anomalies in the marketplace. Uptrend, overvalued, downtrend, uptrend, undervalued, downtrend, overvalued in the marketplace. You know, look at that sell in Walmart. Are we down in Walmart? Weekly chart here? Yeah, right. Are we overvalued? Yeah. And look at this. I get so excited about these charts. I'm like the Richard Simmons of charts. They just jump up and down about these things. How the heck could we get overbought? You couldn't get overbought there, could you? Just looking at technical price action, nothing would give you overbought there. But we know about the internal structure of the marketplace. We're overvalued. So overvalued is not the same as overbought. We have a whole different measurement of stock prices. And that sets up a sell signal in Walmart. Anybody have questions? Some of you have used this in the future markets. You want to chime in? I'll go way to the back and we'll come up to the front.
Does that work just on stocks that have dividends?
No, that's any stock. Because all stocks are related to interest rates in a way. Might have more impact with a dividend stock, but I use it on stocks that have dividends, stocks that don't have a dividends. It works. Pardon? This is in TradeStation, in our TradeStation pack, and I think it's a NinjaTrader now as well. Please.
Carrying with the 10-year or 30-year bonds?
We're using 30-year bonds in this. Yeah, because that's the bond contract that we trade. And again, you know me, I don't believe that there's that much difference between any of this stuff. So you could probably use T-notes if you wanted to, but I've defaulted to the bond market. Please. Let me get back there so I can hear you. I'm sorry. Can it be used in commodities? Oh, absolutely. Except in commodities, you'd want to use something else. Because commodities relate to gold. So that's what we do in commodities. We use gold to value a commodity against, because gold is theoretically the storehouse of value. So there I would use commodities versus gold. In futures, it's all about stocks, it's all about interest rates, so I want to look at the bond market. Question?
Will the VIX fix work on the VIX?
Will the VIX fix work on the VIX? Yes, it does. In fact, a couple of traders wrote an article about my VIX fix on the VIX. Yes, because the VIX fix has trend to it. We can take the trend out by putting my VIX fix on the VIX.
What about currency? Does this work on currency?
Sure, it works on currencies. And again, if you want to fine-tune this, you could use the dollar index versus the euro currency, or the Mexican peso against the Brazilian real, because both those countries were going to kick everybody out that came into America if Donald Trump was elected, right? So yeah, but what you want to do is say, okay, I'm in a currency guy, I want to compare this versus gold currencies or this versus the dollar index. Same thing applies, sure. Because fundamentally it gives a value ratio that there's nothing in technical analysis that does that for us. Question?
So we're aiming to buy stocks, at a value point. Could you use a high cap stock, like Apple or whatever, to evaluate these cheaper stocks that we're looking at getting into?
The question is, could you use, instead of bond markets, use a large cap stock versus a small cap stock?
Yeah.
I never tested, I don't know.
Okay.
I don't know. You can test it, I don't know, don't have a clue. You can think about it a little bit. I don't think on my feet too well anymore, so I can't think fast enough. I don't know. Just test it and see.
So in the indicator, how do you change what it's being compared?
I'm sorry, Steve?
In the indicator, the Will-Val indicator, how do you edit which commodity or that it's being compared against?
It depends on the platform you're using, but in this we allow you to put in, this is the bond market, you could put in gold or whatever you want.
So would it make sense then for, like, say, an oil company to compare it to crude?
You could do that, yes. Yeah. Or an oil company to the industry, to the ETF of crude. So you're representing one company versus the industry average of crude. You could do that as well. This just opens up so many doors. When I had this idea, we can find valuation in a stock, short-term valuation. This is like a whole revolutionary idea, and it's been a great one. Please.
So what is this indicator based on?
Again, it's the spread between the stock price and the bond market, and then we oscillate that with a 13-week moving average. Why 13 weeks? Because the stock market's a deck of cards, as we talked about earlier, with the 13-week earnings report. So the setting is 13 weeks, 75% and 25% are the levels. Oh, seasonal patterns, wow. This is be the best helpful stuff you will have as a trader, as a short-term trader, what you're going to learn about seasonal patterns. So this has been so helpful to me. So this is how it works. We're going to find, this is Walmart, and I'm going to look at the seasonal pattern of Walmart. And I see it, usually it rallies here, usually this is the big move from there. I'm not interested in this little move. I'm interested in the bigger move. That's a pretty good move. That's a pretty good one. That's a big one. I'm interested in finding the seasonal big moves in a stock. You do this in commodities. I learned this in commodities. Now, a lot of you, how many of you use seasonals in trading? And what do you think? They suck sometimes, sometimes they don't. They can be good, they can be bad. You got to just get the good ones, though. I wrote the first book ever in the history of the world about seasonality and commodity prices in 1973. And it spawned this entire cottage industry of seasonal books and services and all sorts of stuff. And I made an error back then, and they continue to make that error. So let me show you the error first of all. And nobody finally figured out how to make these really work. The error that we made, that I made back then, is as we looked at a seasonal pattern in a market, we did this. This is the Dow Jones Industrial Average over a long time period. So through today, we take all the data and we find, maybe this is a year and that's a year, that on average, the Dow does this and does something like that. So we say that's a seasonal pattern, and we repeat that, so every year has the same seasonal pattern. But back here, we didn't have the information of the Dow Jones up there, did we? So that we're using this time period to get a seasonal trade, to be a buyer of hogs or corn or gold or Starbucks or Walmart, using data from this point forward. Is that good math? Horrible math, isn't it? We're using out of sample data we didn't have to give us a buy signal in the past. Well, we would have bought wheat in 1953 if we had known what wheat did in 1976. But you didn't know that in 1953. Everybody has made that error. The same error I made in my book. Finally, I realized, no, my seasonal pattern needs to be this, what we know now, shifted forward 12 months. That's the seasonal setup for now. So this seasonal pattern, ours is true. We know only data up to this point in time is what we're going to use. Because the seasonal guys, have you put it all together, gone back and found winning trades in the past, but you would never have known that. It doesn't mean they'll be true today. That's the big error that's been made in seasonal charts. So we generally have an idea that we should have a market low in March in Walmart and a market low in October in Walmart. Now, a lot of you have traded those. Sometimes they work, right? Sometimes they don't work. So that's the next step. How can I find the ones when they do work? I want to, will it work this year or will it not work this year? That's what I really need to know. And it's really simple to find out. But the first step is we're looking for the big seasonal pattern. We're going to isolate. I might get a seasonal trade in October this year, end of September, 1st of October. Walmart usually rallies, and quite a bit. So that's my seasonal setup. Got it? This is Walmart. Usually Walmart has a nice rally in March. We looked at that in the last chart. That's the March rally, usually pretty good rally year in, year out. Walmart's rallied there. This year, Walmart didn't rally there at all, did it? Why? Why didn't it work this year? Here's why. Here's why. The seasonal rally in Walmart should start to build up in here. We should start making higher lows. We're making lower lows. In other words, price this year is not congruent with the seasonal. Price this year is weaker than the seasonal, so the seasonal is not going to work. So if you compare price action now versus the seasonal, then you know if the seasonal is going to work this year or not. That's what makes seasonals work. What we've done before is blindly say, oh, I want to be a buyer here. Well, wait a minute. Let's look at versus price action itself. Actually, we usually decline this time of year, don't we? Do we want to take the sell this year? Is price weaker than or stronger than the seasonal? Weaker than, right? So, hey, glory, hallelujah. This year, the seasonal's going to work for us because we usually sell off at this time of year, and this year price is weaker than on average what it's been. So yeah, The odds of this seasonal trade working are substantially increased. I'd say maybe 90%. We're going to have a good sell signal in Walmart in here because we should be making higher price highs, and we're not. We're weak in the market at a time to expect a seasonal decline in the market. Do you get it? That just opens up a whole new world of how to trade seasonals in the marketplace. Let's look at our next chart. All right? So here's Starbucks. Starbucks usually makes a lower low in March than it did in January and February, and then has a pretty good rally. Oh, this year, are we weaker than or stronger than the seasonal pattern? A lot stronger, aren't we? So, pony up in that long line in Starbucks, get your cup of coffee, and buy Starbucks. Because we're at a seasonal point, we should rally, and we're stronger than the seasonal pattern. Same thing happens over here. We should rally, we're stronger than the seasonal pattern. So the only time I want to take a seasonal trade is when price is stronger than the seasonal pattern. Notice there's a great seasonal sell in Starbucks in here to come down, right? Are we going to take this seasonal sell? No, aren't we? Because look, price is a lot stronger than the seasonal pattern, isn't it? So all the seasonal guys just grind out, sell Starbucks based on a seasonal or gold or whatever it is. They're just looking at numbers in a computer. But we're a little smarter. We're looking, saying, oh, yeah, I see. I might have a good sell in Starbucks this year. Oh, I'm stronger than the seasonal pattern. It might decline, but probably not by very much because I'm bucking the seasonal weakness of the marketplace. And that has been an absolute godsend for me as a trader. To go, oh, seasonal's going to work. And then I have a little confirmation from almost anything else, and I've got a great trade in the marketplace. Question?
How many years of seasonal data are you?
In mine, I'm using about 15 years of seasonal data. A little problem, I like to go back to 2002 when we went into electronic sessions. Data from 2002 backwards, non-electronic sessions, things are a little different. So to me, the kickoff point is 2002 based on electronic sessions. Yes, please.
But don't you have to look at the underlying product of Starbucks, which is the price of coffee, which has been going down and giving Starbucks a much higher profitability because they raise prices, not lower them when their cost of product goes down, as it has been for the last.
So the question is, can we compare Starbucks to coffee? We used to be able to do that. But now Starbucks sells more cream and sugar than they do coffee. More milk and sugar products. So you probably want to compare Starbucks to sugar versus, but yes, sure, you can. I used to look at Starbucks versus coffee until I realized, well, everybody's getting a sugar fix that goes to Starbucks with caffeine as an added benefit to it. But it's a sugar company.
Are you looking at the underlying product?
Sure, you can do that. Absolutely. Like we're talking about an energy stock, we could look at crude oil versus, you can do the same thing with Starbucks. Or a jewelry company versus gold.
But do you ever see the underlying product be opposite of what the seasonal, the seasonal of the underlying product being opposite of what the stock is that you're looking at? That's my point.
I don't know. I don't recall. But can it happen? Yes, because you know what? In this business, anything can happen. So sure, it can happen. But I don't have the data for you. I apologize. I just don't know. I got your point, but I don't know.
Quick question, ADX, which one do you use, 14 for the daily or 14 for the weekly?
ADX, we just use the ADX index itself, not the, pardon?
Is it 14 period or?
We use an 8-bar setup on ADX.
Oh, 8 bar.
Yeah.
Thank you.
So that's the secret to trading seasonals. So here's Exxon. Oh, let's see. Exxon usually declines in May of each year. Would we want to sell Exxon this year? Now you see it, don't you? In like 7 minutes, you suddenly realize how to make seasonals work. Once we grasp how this stuff works, go, well, yeah, usually we have a pretty big decline, and this year we usually make a higher high in here. Higher high. We're not making a higher high. I want to take that sell signal. And we usually rally in here a pretty good rally starting in February. Do I expect much of a rally? No, because I'm making lower lows instead of higher highs in the marketplace. So it might work this year, but it's not a certainty that it'll work this year. I don't want certain trades. You know, I have a lot of years left. They got to be winning trades for me. You young kids, you can have a lot of losing trades. You don't care. But I just want the winning trade. So this is how I finally figured this out about 4 years ago. And I thought, well, Larry, why didn't you think of that one sooner? I mean, come on, this is so, now you know it, right? Like, well, yeah, that is so basic. It just took so many years to figure, yeah, I got to look at this versus price. And that's like all the good stuff, it's really simple. And that's the simple solution to it. Okay, here's Qualcomm. My gosh, there's a nice rally in Qualcomm every year in October, but I'm not interested this year. It's weaker than. Do I want to sell Qualcomm here? Yeah, it's weaker than the seasonal pattern. I want to sell. Do I want to sell this seasonal pattern? No, because I'm making higher highs. And actually, that wasn't too bad. Prices bobbled along. They finally came down to the seasonal low, but I missed all that. That didn't work this year because it's not congruent. It's all about congruency between the seasonal pattern and the price of the stock itself.